Hello everyone, welcome to United Classes. So today we will learn about circular flow, which is a small topic of macroeconomics. It is one of the easiest topic but an important one. So if you like our video, please like, share and subscribe our channel and don't forget to click the bell icon. Without wasting much time, let's get started. So topics which are to be covered today are what is macroeconomics, what is circular flow of income, types of circular flow, and the three conditions under which circular flow is studied. First, we will know what is macroeconomics. So, macroeconomics is the branch of economics that studies the behavior and performance of an economy as a whole. It focuses on aggregate changes in the economy such as unemployment, growth rate, gross domestic product, and inflation. Key points: it studies the behavior and performance of an economy as a whole. It focuses on the aggregate changes in the economy. You might be knowing the definition of microeconomics. So, microeconomics is also the branch of economics that studies the behavior and performance of an economy individually. And the only main difference is that my macroeconomics studies as a whole and microeconomics studies individually. The key points are it is the study of aggregates, it studies economy as a whole, and some examples are like national income, national output, etc. So macroeconomics got its identity only after publication of book General Theory of Employment, Interest and Money. This is just for your general knowledge. Now, what is circular flow of income? By just listening the name circular flow, you might be getting some idea it is related to some circle. You are right. Circular flow refers to the continual movement of goods and services and money in an economy. So the continuous movement of goods and services and money in an economy is called circular flow. It forms the basis for the measurement of नेशनल इनकम कैलकुलेट करने के लिए ये हमारा बेसिस रहता है सर्कुलर फ्लो दो तरीके के होते हैं मनी फ्लो एंड रियल फ्लो Now we will see what is real flow and what is money flow. So real flow is the flow of factor services and final goods between firm and household. So to understand the concept of circular flow, we must understand that there are two basic sectors, firm sector and one household sector. So the flow of factor services and final goods between the firm and household is called real flow. This is diagrammatically expressed as firm is giving final goods to household sector, and then in return household sector is also giving factor services to firm sector. The factor services include land, labor, capital, entrepreneurship. And then money flow is the flow of factor payment and consumption expenditure between household and firm. So the final goods which firm sector gives to household sector is consumed by household sector. So household sector needs to pay for that. So it pays the consumption expenditure to the firm sector. And then the services which household sector has paid to firm sector also needs to pay it to household sector. So it in return of factor services, it pays factor payments. For land, it pays rent. For labor, it pays wages. For capital, interest. And for entrepreneurship, it pays profit. So this is the explanation of what is real flow and what is money flow. So in the previous figure, real flow goes clockwise and money flow goes anti-clockwise. So Here we saw that the real flow goes clockwise. This is the real flow, which is the full flow of factor services and final goods. That is clockwise, and it is money flow is anti-clockwise. One more thing, hint to remember, money flow is related to factor payment. Payment, here payment word refers to money only, so you can easily remember what is real flow and money flow. The thing related to factor payment and consumption expenditure is called money flow, and the flow of factor services and final goods between firm and household is called real flow. Circular flow of income is studied under three conditions. First, circular flow of income under two-sector economy, circular flow of income under three-sector economy, circular flow of income under four-sector economy. So first we will see circular flow of income under two-sector economy. So in a two-sector economy, there are household sector and firm sector. The mutual dependence of these two sectors in an economy is diagrammatically expressed as. So this is the diagram. This is the diagram which we discussed earlier also. Firm sector and the household sector. The firm sector gives final goods to household sector, and in return household sector gives factor services like land, labor, capital, entrepreneurship to the firm sector. And then when firm sector gives final goods to household sector, the household sector also gives consumption expenditure. It gives consumption expenditure because the final goods which it receives, it consumes them, and for the consumption, it gives consumption expenditure to firm sector. And when the household sector gave factor services to firm sector also needs to pay the factor payment for that to household sector. For land, they pay rent. For labor, they pay wages. For capital, they pay interest. And for entrepreneurship, they pay profit. One more thing is added, which is financial institution. We all know what is a financial institution. Its examples are banks, types of banks like commercial banks, investment banks, brokerage firms, insurance companies, etc., where we save and borrow. Likewise, firm sector and household sector both do savings in financial institutions and both borrow also from financial institution. Like we also do savings to banks, and we also borrow in the form of loans from banks. So in this type of circular flows, what is the major role these arrows play? The very major role. If you put wrong arrows, it will be of no use. Like if you will put this arrow to this, then it will be totally opposite. Like it will say that firm sector pays factor services to household sector, which is not right. So what you have to keep in mind while drawing a circular flow is the arrows. Second is circular flow of income in a three-sector economy. So in a three-sector economy, there is household sector, firm sector, and government sector. The household sector, firm sector, and government sector. So the mutual dependence of these three sectors in an economy is diagrammatically expressed as this. This is also again the same diagram. The difference here is there is only money flow and there is no real flow. From till first conditions, there were both money flow and real flow. But from second condition, there is only money flow, and there is again firm sector, household sector, and since it is a three-sector economy, one more sector is added, that is government sector. Financial institution remains constant. Again, there is money flow. like consumption. In this, again, there is consumption expenditure which household sector gives to firm sector, and the factor payments, that is rent, wages, interest, profit, which they paid for land, labor, capital, and entrepreneurship to household sector. Remember, there is no real flow, there is only money flow. Financial institution in which we do savings and borrowings. Firm sector also saves here and borrows from here, and household sector also saves and borrows from here. Let's see about what is added. Added is government sector. So government sector, first we see its relationship with financial institution. It is same as of firm sector and household sector. Government sector also saves in financial institutions and borrows from financial institution. Now, both firm sector and household sector pay taxes to government sector, and government in return pays subsidies to firm sector and transfer of payments to household sector. So now you will ask, what is transfer of payments? The transfer of payments is the payment made or income received in which no goods or services are being paid for, such as a benefit payment, or you can also call it as a subsidy. Then the government sector purchases from firm sector and pay for its services to household sector. Again, here also the most important role plays the role of arrow. Arrow plays a very major role. Look clearly in the diagram where the arrow is. This is the most simple diagram which I am explaining you, and you will not find it anywhere. Just look at the arrows. Where are the arrows going? And don't do opposite of that, because that will not be right. Third and last condition is circular flow of income in a four sector economy. So in a four sector economy, there is firm sector, household sector, government sector, and external sector. The mutual dependence of all these four sectors in an economy is explained through this diagram. I know many of you might be thinking that this is a very complicated diagram, but it is not complicated. If you have understood the previous diagram, this is nothing, just an addition. You all know the relationship between household sector and firm sector. Again, here also remember, there is only money flow, that is consumption expenditure and factor payment. Factor payment, you all know, rent, wages, profit, and interest. Okay, and financial institution here also remains constant, in which we do savings and borrowing. So role of financial institution is also same here. The firm sector and household sector, and including the government sector, they do savings in financial institutions, and they also do borrowing from financial institution like we do also. Here, the role of government sector is also same. Both firm and household sector pay taxes to government sector, and in return government sector pays subsidies to firm sector and transfer of payments to household sector. Then government purchases from firm sector and it pays payment for services to household sector. These are the points which you have understood till second conditions, and now one more external sector is added because it is a four sector economy, so four sectors are added. There is no relationship between financial institution and external sector. They have relationship between firm sector and household sector. So first we'll see the relationship between firm sector. So firm sector, they pay for the import. The goods and services which external sector imports to firm sector, they pay for that import. And every time we also, when we purchase something, we receive a receipt. And for that same, firm sector also receives a receipt from export. Okay. And now from a household sector. Household sector pays international factor payment to external sector and receives international transfer payment through household sector. So, what is international transfer payment? So, we all know what is transfer payment. It is the payment made or income received in which no goods or services are being paid for, such as a benefit payment or it's like a subsidy. So, it is done internationally to external sector. So, it is called international transfer payment. And what is international factor payment? The factor payment here also we can see factor payment. The firm sector pays factor payment to household sector for giving factor services. Factor payment is the payment which is received for giving factor services, and when it is given to external sector it becomes international factor payment. Likewise, in all the circular flows, here also arrows play the most important role. We all need to keep in mind there are three conditions: two sector economy, three sector economy, and a four sector economy. In two sector economy, there are only two sector, firm sector and household sector. In a three sector economy, one sector is included, that is government sector, and in a four sector economy, external sector is included. The only thing that remains constant is the financial institution in which we do savings and borrowing also. These all circular flows might be looking very complicated and difficult, but once you understand this, it is the most easiest thing and a very fun way to draw. You just need to practice all these diagrams 4 to 5 times each, and then you are all ready. So, circular flow of income in four sector economy represents the total working of macroeconomy in the following identity. This is one formula. This is the basic formula for calculating national income. This formula is going to help you in future also. If you will select economics as a subject in future, this formula will be with you and is going to give you a great help. So just remember this formula by heart. Y is equals to C plus I plus G plus X minus M. So what these symbols represent? Y is equals to income. C is equals to consumption expenditure. I is equals to investment. G is equals to government expenditure. X is equals to export and M is equals to import. X minus M is where minus M, import, is always in negative terms. Income, you all know what is income. Consumption expenditure, the expenses which we pay for our consumption is called consumption expenditure. Investment, when we invest in something is called investment. Then a government expenditure, when a government purchases something and for that they need to pay something is called government expenditure. And then, and by export we mean that sending goods or services to another country for sale. Likewise, import means bringing goods or services into a country from abroad or sale. So this formula is going to help you in future also. This is the basic formula for calculating national income. So, thank you. I hope I have cleared all your doubts related to circular flow and have explained the diagram very clearly. If you have any more doubts related to this topic, you can write it in the comment section below. Topics to be discussed in the next parts: aggregates of national income, different formulas for calculating national income, and some questions for practice. So if you like our video, please like, share and subscribe our channel, and don't forget to click the bell icon. You can also follow our Instagram handle, which is United Classes, for more latest